Recording started. Yeah. Sumit, thank you for that. Bernie, thank you. All right, here we go. Welcome to NP Financials Trading Masterclass, 6th of September 2025. This time we are doing on a Saturday because tomorrow is a Father's Day. So we got request that can we shift to Saturday. We did that, and thank you all for accommodating on Saturday. Someone wants to join. Who is that? Yogendra. Yeah, admit. Yeah, that is why we are doing it on a Saturday. That is why we are doing it on a Saturday. But this is one of. So the good afternoon, Yogendra. Thank you, Kim. And so this Saturday is one of, and otherwise we'll have first Sunday of each month. So first Sunday of each month. So we'll start with, as usual, we'll start with our general financial advice. Warning: NP Financials Pty Limited advises all service recipients of the following. This information is provided only on general advice basis. This is only educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. No information received from NP Financials shall be considered as a financial trading recommendation. I'll give you 15 more seconds to go through this.
Hold on.
Yeah.
Agree the same.
Yeah, thank you. So what we will do, anyone else? Yogendra is already admitted. Make a contributor. Hi Yogendra, how are you? So I have already got questions from Sumit regarding EuroCAD and Girija for gold. And Bernie, we have two questions. Let's see Bernie's question. I'm adding a question for later part. Could you please show an example of using Fibonacci levels to execute a trade, retracement, or extension to see how it would be used? Very good. So Fibonacci, I'll write down. And then could you show how pivot point support resistance can be used in a trade also? So pivot point. Okay, pivot point. I don't know how many of you know this trick. This is a world of AI. So I'll show you a simple trick. Maybe you know it or may not know it. But you know snipping tool. So snipping tool is a free tool in Windows. When you do new, and supposing you want this to be captured, you captured this in a snipping tool. Yeah, most of us know this. And probably the new thing which you have not noticed is this one. So this one, text action, will convert this image into a text. So let's see that. Go to this. So the text is captured. Copy all text. Ding. Copy all text and then go to anywhere. For example, if you want to go to a new and then paste it. How many of you knew this? How many of you don't know this? It's a new addition. Yeah, small little one which is handy, isn't it? All right. So we'll start with today. I was Marty told that he will also be delivering, and Kerry also told, but I don't know. Maybe they'll be joining later on. Otherwise, we will carry on. So we'll start with a few things I have in mind. But first of all, I'll take the questions which was written by Bernie, and the questions is in the notepad converted already. I'm adding a question. Could you please, Bernie, could you please show an example of using Fibonacci levels to execute a trade, retracement, or extension to see how it should be used? Absolutely, very good. So Fibonacci is a great tool, absolutely brilliant tool. And to use that tool, we before even thinking to use Fibonacci, we must ask ourselves, is Fibonacci required? First of all, question is Fibonacci required? And the second thing is, why am I drawing this? And third thing is, what am I expecting out of this? Okay, let's go to our, for example, dollar index. We'll start with dollar index. You can, Bernie, do you have any specific instrument to be seen or no?
No, no, dollar index is good. Yeah.
Anything is good. Okay. So, for example, we are at 9733 in dollar index. If you understand dollar index, which is DX or DXY, DX in pro real time, DXY in Go markets and FTMO and others. So we are at 9733, and we are seeing that price went to make a new swing high, which is higher than the previous. So this is the, if I draw a vertical line, if I draw a vertical line here on this point here like this, if I draw a vertical line on this 1st of July, then we are seeing to the first swing high to the left of 1st of July is this one. Everyone agrees? So this is the first swing high before this. Forget about the right hand side. So this before this 1st of July, which is the lowest point after probably 13% drop, after a head and shoulder. This is the head, shoulder, this one the shoulder, right shoulder, left shoulder, and head and shoulder. And after this we have a drop of 13%, which is not very usual. So this is the head, this is the right shoulder. And for those of you who are new, we can have this as in left shoulder. We can have this as the left shoulder. Yeah, left shoulder. And this neckline we can draw from this to this. So this is the neckline. This is the neckline. This is the neckline. This is the neckline here. And you can measure it from here to here. The target should be 365 pips after we entry. So let's see. So we enter here 1 pip below 365. So this is first 365. So 1% there, 1% here, 365, and then again another 365 here. So 2% there, and again another 365 here, 3%, 3%. So we got 3% because our stop loss was there like that. But the instrument has fallen from this top to this bottom, top to top, fallen 13%, 13%. So if you see the history of this dollar index, because if you understand dollar index, you understand every bit of it in forex. So you understand dollar index, then you understand euro, sterling, yen, because euro, sterling, and Aussie will do the opposite of what the dollar index is doing, and gold will probably do the opposite what the dollar index is doing, and then USD JPY will do the same. So if you see on this one, on a monthly chart, if it goes to your 2014, 15, whatever it is, you see the fall. You can see my chart is only going up to 2019. I don't know why, but anyway. So in this also I can show you. So if I check this from this, which is March 2020, COVID, the COVID has dropped the dollar 14%, 14%. And the inflation, C for COVID, I for inflation. It is good to write it down. Otherwise, human brain does not remember much. In the inflation, you can take this scale. You can take this scale here. From the inflation, it fall 13.59. So 13.59, and 14.12, very similar. And now you can see, and now from here the tariff, famous Donald Trump tariff, has brought dollar index down to 13%. So 13% is the key figure for dollar index. So here also 13% plus minus 1 is okay. So here 14%, here also 13.6, here also 12.7, which is 13%. So if 13% is a measurement for dollar index to probably come down and then go up, then what we can do, we can start from, either you can start from weekly, or you can start from daily. Supposing you have too many lines, what you can do, you can press O or Control J or Alt J, depending on your charting software, Pro Real Time. Where is that O coming from? This is coming from, if I right click here and display objects, then in my case, the display object, this one is O. For you maybe Alt J or Control J. So if you see O pressure, it will come and it will go there. Okay. So Dhanuka is requesting. Let's add Dhanuka. Add people. So far so good. Any question?
Partha, just on that, you said USD JPY will follow the dollar index. Are you saying there's a correlation between USD JPY and DXY?
Exactly, correct. Very good question. I'll write it down. First, I'll explain the correlation and then I'll go to the Fibonacci. Okay. Great question. So now, this is dollar index. If you right click here, so Bernie has asked 3 questions. I'll take the third question first because that is most relevant. If you don't want these lines also, you can click on here. You can click on here on the Pro Real Time. This line will also go. This line will also go away. See, now I have a bear chart. I have a uncovered bear chart, which is very good. And then I'll right click here and then go to more. This is for Barney and each one of you. So more, and then go to compare to instrument. So write it down, right click, more, compare to instrument on a bear chart. And then in here, you write USD JPY. And then select the mini. Mini means $1 a point. You can select the standard also, $10 a point. But we generally see mini. And the JPY is coming in a different, what is this, pink and blue, and this one is red and green. So if you see here the correlation, if the dollar index is going up, which is the red and green, this fellow is also going up. Can you see that? If the dollar index is coming down, this fellow is also coming down. Can you see that? When the dollar index coming down, this fellow coming down. When the dollar index is going up, this fellow going up. So this is how you do the correlation, Barney. Okay.
Yeah, and
that is why whatever the dollar index is doing, the USD JPY will also do the same. Now, if you do opposite, which is the Euro USD, right click here, and then repeat the same thing, more, and then compare to instrument, and then select Euro USD in a different color. So you will see when the dollar index is going up, Euro USD is going down. So it is opposite, because USD here is the term currency or the quote currency. Yeah. So this fellow is going down. That means this fellow is going up. Make sense?
Yeah.
So did I answer your question on the correlation?
Yeah, definitely. And just, I guess, it could be a bigger question, but as a strategy, could you place 2 trades? So if you're trading the dollar index, could you do the opposite trade for the Euro USD?
Yeah, very good question. Yes, you can definitely do it. So let me just give me 30 seconds. I'll just copy this fellow.
I have similar question, Partha, that I know I did the class for correlated pairs, that that index is there, matrix is there, then what we can trade. But like in NP Financials, it's only 8 pairs which we focus. So if it's 8 pairs only we focus, and out of that, I think 6 is linked to DX. So if I'm opening a DX, I'm trading DX, So how is it advisable to open the other trades also at the same time?
So your question is it possible to open?
No, possible. It is possible, but it is advisable because if DX, suppose like USD JPY or Euro USD, they are all correlated with DX.
Yeah.
If I have already a DX trade open, suppose I am buying DX, so should I open the trade for Euro USD and USJPY? I mean, at the same time.
Yeah, that's exactly what this fellow also asked Bunny, right?
Yeah.
Yeah. I'll answer that question. So to answer Barney and Sumit's question, yes, definitely you can do that, and definitely you can do that because if it is so strongly related, dollar index and euro is so strongly related, you can definitely do that. But you need to keep in mind one thing. You need to keep in mind one thing, which is if you win, you win. If you win, you win 2%. But if you lose, you lose 2%. Make sense? So if you are ready to take that risk, that is fine, and take that. But if you are not willing to, because the name of the game or the name of the business, I call it game because we enjoy something. Any business, what you do, you need to enjoy. You need, like Yogendra is doing a big business. So Yogendra, I'll ask a question. Yogendra is there or not? I think so.
Yes, sir, I'm here. Yeah.
Yeah, you're there. You are doing a business,
Yes.
right?
Yes.
So you love it, doing it?
Yes, I love it. Yeah.
Yeah, absolutely. Yeah, anyone who is doing another, I mean, there are many people who are doing business here. I know Yogendra is doing, and I believe, yeah. So who is doing business here? The Dhanuka is already there. Hi, Dhanuka, how are you? Yeah. So many people are doing business. So yeah, unless and until you love it, you don't do it. That is why we call it a game or a business, whatever we call it. So the name of the game is protection of the capital. Name of the game is protection of the capital. Because why? If the more you protect the capital for a long period of time, for example, 5 years, 10 years, then you can do this business for 5 years or 10 years. But if you blow your account in 1 year or 6 months by taking unnecessary risk, when you know that you can lose 2%, why should I take that? But if you have studied this for long, maybe for 10 years, you have done the back testing, then definitely you can take. So the advice is, yes, take the opposite trade or the same trade if you are a little bit experienced or have done the back testing. Otherwise, don't take it. People who are starting, don't take it. So did I answer your question?
Yeah. I mean, I guess, is there any benefit in taking that trade, or is it better to have like a double lot for one trade, maybe?
It will be a double loss. Yeah. It can be double loss. And if you have studied this for long, for example, let me show you what do I mean by studied this for long. So if you go to our asset class evaluation and then you go to Forex, we take a lot of effort to do all these things. So if you do this, and then we have posted in 13th of July that this dollar index and euro has crossed each other last time in November 2021 in a weekly chart. So this is a weekly chart. So weekly chart, dollar index, they have crossed each other in a correlated chart in November 2021. So this is probably happening as we speak. And this was posted in July. Now we are in September. So July 4 weeks, August 5 weeks, 9 weeks, and September 1 week, 10 weeks. So this is running for 10 weeks. And if you calculate this 1, 2, 3, 4, 5, 6, 7, 8. After 8 weeks, dollar index went up 20%. This fellow went down 15%. So if you have studied, then you can definitely make 35% here. This is 20%, you can see. This is 15%, as you can see. Not in one trade, maybe in multiple trades. You get in, get out, 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 get in, as per our exit rule, as per our entry rule. So what I'm telling you as a last pointer of this discussion on correlation, if you have studied this, for study means what? Just spend time on correlation. That's it. And you see this, oh my God, if they kiss each other, if they touch each other, then they go like North Pole, South Pole. So this fellow goes north, this fellow goes south, and I can make money here. Same thing is probably happening now. Same thing is probably happening now, as you can see here on a weekly chart. Here. Make sense? So
just a question.
Yeah.
Just will DX cross below that below the other currency?
Sorry, below zero. This like
Yeah,
this.
at this point here.
Yeah.
No.
It can the zero. Very good question. The zero is coming from your scale selection. So if you go to settings price, the scale, you can select first display price as a reference, or first loaded data, or highest displayed, whatever you can select. So if I prefer to see first displayed price, otherwise it will take everything. It will take now. That is good. So that means what? From the first displayed price, it was zero here, and if the euro depreciates, it will go down. Like if the dollar depreciates, it will go down. Yeah, go down in value. That means this fellow can go down 5%. From here to here, it can be 10%, because this is 10%. See, this point, this fellow is 10% here, plus 10, and this is minus 5. So from this swing high to this swing low, it can go 15%. It can go 15% from this to this, as I showed you before, 14.23. But at the same time, from here to here, it can go up 28%. That is also possible. So to answer your question, yes, it can go below the first display price, which is like this. Did I answer your question?
Yes.
All right. Any other question on correlation? After that, I'll go to Fibonacci.
Can we make use of DX when we are trading other two pairs, for example, GBP, CAD?
Very good question. So the purpose of, I think, that was Anil, isn't it?
Yes,
So
sir.
the purpose of studying this very important concept, the very purpose of doing this extremely important concept of dollar index study is, when we study dollar index, we know that exactly opposite will happen for euro, USD, GBP, USD, and AUD, USD. So exactly opposite will happen. And then exactly same. Exactly means what? 90%. 90% is good enough. 90% is very good enough. 90% USD JPY, it will go in the same direction. 90% it will go in the same direction. Okay. So if we know that, then possibly studying dollar index will help us to, if we observe that this is going to go up, then it is better to go short the euro market. Now let's concentrate on the other four. So already I told you euro sterling and euro sterling. I can quickly show you if you want. Quickly I can show you compared to instrument GBP USD. If I do, it will go in say opposite to say same. It is doing the same. So opposite. I can do this color, same color. So let's make GBP as this blue. Let's make euro as this color. Let's make this fellow dollar index this color. And then last one would be the, quickly I'll do it more, and compared to instrument will be AUD USD, for example. So all these three euro, sterling, and Aussie will do opposite to dollar index. Okay, will do opposite to dollar index. If it goes up, this fellow goes up. If it goes down, this fellow goes up. All three. Now, as I already showed you yen. So more, I'll again repeat that compared to, because this is extremely important, because you people are now going to so if I do this, so yen will do the same according to dollar. So why am I doing this? I'm telling you, you have to do your own back testing. If the dollar index, you know what it is doing, then you know what these three fellow can do, then you know what this fellow will do. So 4 is done. 4 is done. So then we'll talk about what will happen to euro, what will happen to euro AUD and GBP AUD. Very good question. Okay, let me show that. Let me delete this. Ding, 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 ding. Okay, I'll change these to euro. Now I'll change this to euro. So now we have to do, maybe in a daily chart we can do. Okay, now this is a daily chart. So the movement of euro USD, we already know that if the dollar index is going down during due to tariff, the dollar index I showed you went down 13%. Let's see, this fellow went up 15%. So 13 plus 15, 28% in opposite direction. Now what will happen to euro Aussie? Because euro will also go up, Aussie will also go up, because dollar is falling, dollar is the term currency. Then in that case, what will happen? We need to see the rate of change of euro and the rate of change of Aussie. Let's see. So let's plot this fellow, Aussie. You'll understand.
That's not
So
going to be much, is it?
sorry, what was that?
That's not going to be much.
Yeah. So see, the rate of increase of euro compared to the rate of increase of this fellow, whose rate of increase is better than what? Can you tell me?
Euro is better.
Yeah. So euro is better. That means what? Combining this into euro AUD was supposed to go up. Now let's do that. So I'll do this. This is absolute magic. If you can really spend some little bit time, if you love it, if you love this, because there is no limit of what you can do with this. So you can trade $1 million. You can trade any amount from a prop trading. So what I'll do now, I'll do a duplicate chart side by side. I told that euro Aussie will go up. Let's see. Now remove this fellow AUD, and then make this as euro AUD. Let's see. Euro AUD during this time can go up. Where is euro AUD? Not there. Let's see. Oh, sorry, I changed this also. This has to be unlink. Yeah. Anyway, so did you see that this fellow went up according to our understanding?
Yes.
Fantastic. So now that we know, we added one more, euro AUD. So for euro AUD, we have to just study euro rate of change of euro and the rate of change of Aussie. Now let's do GBP AUD. So let's see. Let's delete this one. Let's make this GBP. Let's make this GBP. I hope you are understanding. If you are not understanding, let me know. And those of you who are new, don't bother too much, because you are not to that stage. So that is fine. Absolutely fine. We will take you there. Don't worry. We'll take you there. Those of you like Joyce, who is very new, like Yogendra is very new. So don't worry. We'll take you there. So now I'm seeing GBP USD rate of change is quite steep. Right click and then go to more, and then do to compare to instrument and do AUD USD. So whose rate is more, sterling or Aussie?
GBP is more.
GBP. So what do I expect GBP AUD to do?
GBP goes up and AUD.
So GBP AUD chart will go up.
Yes, sir.
Not as much.
Let's see GBP AUD. This fellow goes up.
Yes, sir.
So this is how, this is the sixth instrument we are adding. Sixth instrument we are adding, which is GBP AUD. So just by studying the dollar index, we already know 4. Then we added rate of change. So we already know 2. So 4 plus 2 is
6.
4 plus 2 is 6. Then
Yes.
we need to only know a little bit of EuroCAD and GBP CHF. They are a little bit different. So let's see how we can do that. So where is instrument settings, and then delete this fellow. There is a those of you who are following I told you already many websites. The one website which I like is the Trading Economics. Everyone know this Trading Economics. If you don't go to you can go to countries, and you can go to Canada here. Whenever you have time, Saturday, Sunday, don't spend time much on TV or on WhatsApp. Spend some time on this Trading Economics also, and you see the non-farm unemployment is quite high. Can you see that? 7.1. 7.1 is the unemployment. 7.1 is the unemployment. Inflation is okay, 1.7. 7.1 is the unemployment. Now compare this with Germany. So let's go to Germany. Ding, 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 ding. Where is Germany? Germany is in Europe. They have deleted Germany. Oh my God. Okay, let's see Euro area. Okay, Euro area. Maybe
It's there,
Germany.
Bala, it's there.
Where is that?
Germany is there.
Where is?
Yeah, just up there.
Huh?
Yeah, below Japan.
Below?
Up. To the left.
Yeah. Germany. Let's go Germany. Now let's see the unemployment rate. It is 6.3. So what? And this is 2.2. 6.3. Okay. So far, Mr. Powell or every one of us know that foreign exchange is derived from interest rate. Foreign exchange is derived from interest rate, and interest rate of a country is derived from inflation. Inflation. That we know, and inflation and CPI are the same. Inflation and CPI are the same. If you see indicators here, inflation and CPI are there indicators, and you go to inflation. I'll tell you why I'm telling this, taking these 2 minutes to explain this, because this is very important. And you go and click on the last. So many advertisements coming, unbelievable. And you'll see, forget about these small countries, Argentina, Turkey, Russia is not small, but they are horrible, 8.8. But if you see United States inflation is 2.7, and that is quite interestingly, it was increasing from 2.3. So if you see 2.3, then 2.7, then 2.7. Yeah, can you see that? 2.3, 2.4, 2.7, 2.7. It is quite interestingly going up from April. But recently, what Mr. Powell, who is running probably the entire world, because he is the chairman of the Federal Open Market Committee, FOMC. What he did last week, if you have heard him, or if you have read what this fellow said in when was that he was speaking? Somewhere around this time he was speaking, Fed chairman. Around this time. And this one, Saturday. You can go back to dollar index and see on Saturday. Let's see, August 20 on the Jackson Hole. Many of you would be probably not giving enough importance to this fellow, Jackson Hole Symposium. But I've been seeing this. We have been seeing this for last. Look, President Trump also speaking. So whatever Fed is Powell is speaking, he will speak the opposite maybe. But anyway, Trump does not control inflation. Trump does not control CPI. Trump does not control interest rate. He is no one in this foreign exchange, but he can control tariff. Yeah, that he can control. So in the Jackson Hole Symposium, those of you who don't know, you can go here and read what is Jackson Hole economic policy, the central bankers. It is very important because it is attended by the central bankers, finance ministers, academics, and financial market participants. Extremely important. So those of you who are not giving importance, start giving this important. And while he was speaking on this Jackson Hole, Mr. Powell took a somersault and he said, no, inflation is not important for interest rate. For the first time, he said, if you read the whole story, for the first time he said, we will more concentrate on unemployment. We'll more concentrate on unemployment. We'll more concentrate on unemployment rather than inflation. So that was a paradigm shift. Because it is a paradigm shift. That is why if you go back to those dates in which it has happened on this fellow, which is the Saturday, August 23rd, and you see dollar index. If you see dollar index on 23rd of August, let's see. While it was going up, it felt like crazy. Yeah. $28. Yeah. So around this time, dollar index was holding. So this was the date he was speaking, if I'm not wrong. Day two was August 24th. This is 24th. Yeah, exactly right. This is Sunday. Forget about Sunday. So August 24th, this 23rd, this is when he was speaking. He was speaking on the before that. If you see why this has become a little bit difficult, and Sumit asked what to do in this type of situation. So what to do? First thing first. If you see the dollar index has come down 13%, that means there is a time to go up now, and you can easily see that write it down if you have forgotten already. The first higher swing low compared to the last swing low, which has fallen 13%. According to everyone is different. Dollar index can be 13%, euro can be 15%, sterling can be 20%. Everyone is different. So we need to study individual characteristics. So after falling the standard 13%, when dollar index first started to show up, first higher swing low, this is the starting point of possible reversal of that 13%. Or a little bit, maybe it go up to 50% of that 13% or 38.2, whatever, Fibonacci, I'll come back to that. So this is the starting point. Of the recovery. So that is for sure. So those of you who are learning foreign exchange for the time being now, for initial stage, always remember it is simple in the sense trend is a trend till is a friend of us till it fails. So how do I know start of a trend? For an uptrend, you need to see higher swing high, higher swing low. First, my mistake, higher swing low. And for a downtrend, you see first lower swing high. After a reasonable uptrend, if you see first swing low, don't see everything. After a reasonable uptrend, if you see first swing high, which is lower than this, then this is the possible start of the downtrend. And opposite, if you see, this is not valid for, this is valid for everything, not only for dollar index, but for everything. First swing low, higher swing low is the start of the possible uptrend. So let's see, it is going down, ding, 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 ding. And let's see, while this printed higher swing low, it has not printed a higher swing high. Compared to this swing high is low. But that means there is pressure of downtrend is still there, but possible change is coming. So we saw the higher swing low. Immediately, this fellow is not only broke this one, but also broke this one. So it is quite good. We are getting enthusiastic that this fellow will go up, and Euro, Sterling, and Aussie will go down. And it did the same thing here. This is the probably for Friday, first Friday. This is because of the non-farm payroll. First August. If you go, you'll see non-farm payroll was bad. Non-farm payroll was bad for United States. Even after that, what happened? This second swing low was higher than the first swing low. The first swing low is higher than the 0th swing low. So this is the 0th. This is the first. This is the second. So swing low going up, swing high going up from here to here. That means it is a possible start of an uptrend. But what happens on the Jackson Hole? He changed the entire thing. He said, no, we are not concentrating on inflation, which is supposed to be concentrated on. Now we'll be concentrating on the non-farm payroll. So when he said that now, fast forward, this is the first Friday of this month. So this is a non-farm payroll day, and this is a non-farm payroll day. And this fellow was speaking here. So to the left-hand side, when he was speaking, Powell, who is a very powerful person, anyone who is on that chair is very powerful. So before speaking that, we are shifting our focus from inflation to employment. His friend or someone like Warren Buffett or Josh Soros may have got the idea that this shift is coming. So they started selling. So that is why, although we are holding a little bit here, we are holding now. If I bring this one here, although we are holding a little bit here, now we have to delete this one. Or we are holding a little bit here. In terms of little, if I do this, is this type of trend line, and although this is not a trend line, this type of wedge line, I would say, this type of wedge line is very, very, very important, extremely important, because that can be a falling wedge, that can be a falling wedge in an uptrend. So in an uptrend, falling wedge in an uptrend is a continuation. That means it can go up. Now, so that is the shift. But this type of shift does not happen every minute or every day or every quarter or every year. This is the first time I heard in last 16 years some governor who is heading the Reserve Bank of America saying that we are shifting our focus from inflation to employment. Probably he has seen the neighboring country Canada has gone to worst 7.1%. 7.1 for an economy like Canada is very high. This fellow is 4.3. If you see the graph, previous was 4.2. This is 4.3. So that means what? He will not increase the interest rate. That means what? The value of dollar index will not go up, will not appreciate. Value of dollar index will go down. Although this is quite the same, 4.3 for almost 1 year or 18 months. But now, since the focus has changed, that is what it happened to dollar index. And your stop loss was hit. Sumit, because of this unforeseen news 7.1 or the now why I'm spending so much time, because now, although we always say that you need to listen to 3 news. First one is the FOMC economic projection, which comes once in a quarter, And then second one is the CPI from United States, not from Switzerland, from United States, month on month, quarter on quarter, year on year. And the third one is non-farm employment change from United States. So because the focus has changed, so that because Canada has gone worst from 6.9 to 7.1, that is why the Canadian dollar depreciated. That is why Euro Canadian dollar went up. Euro Canadian dollar went up. Now you can do yourself EuroCAD and GBP and then send your findings to support team. Now I'll come to the first question on Fibonacci.
Just sorry to interrupt, Partha. Yeah, so thanks for all this explanation. But Partha, if like EuroCAD, what we predicted, if you see in the asset class evaluations also, it was there that it's a head and shoulder.
Yeah.
And it will go down. I mean, that we predicted, my trade was also open according to that, and which was like Fibonacci or wedge, whatever, head and shoulder, it was or double top. So it was predicting that. But it went up suddenly because of this news. So in this case, is there any way to save our stop loss, or we cannot do anything?
No. There is no way you can save the stop loss, because stop loss is of course, when you come to stop loss is a part of the business. Because stop loss is the expense of this business. Stop loss will definitely happen. If it is not happening, then it is a problem. But if it is happening up to 30%, then it is fine. But if it is happening 50%, then it is a problem. But from I have heard from you that all the wages you are doing is almost success 80-90%, isn't it?
Yeah, that's good.
But in this case, we'll delete that head and shoulder. We'll delete that head and shoulder because this line joining the head to the right shoulder is broken. So okay, that's a very one way you could have done that is you could have reduced your loss is if you see that was the head and shoulder, isn't it?
Yeah.
And now till this point it was okay because it has not broken this line, correct? If you remember our discussion on the head and shoulder, we say this line is the most important line, isn't it?
Yeah, I understand.
Yeah. Now, if this line is broken, then we have to delete the entire head and shoulder, correct?
Yeah, I got the point.
Now that this fellow, if you see the last bar, this bar has touched the line, yes or no?
Yeah.
And closed below, yes or no?
Yeah. So you mean here I should have closed the trade?
No, you should have placed it move the stop loss to this high plus 30. So 161.13 plus 30 is 161.30. 43 should be your exit point.
Okay, got it.
Yeah. Instead of going to 62.20.03 to close the trade, you could have closed the trade at 161.43. If you remember our rule of the head and shoulder and the rule of 4. Okay?
Yeah. So, but this is unexpected and happens rare, or because my trade for AUD USD also open, and because of the dollar went down, all these trades hit the stop loss. So my trade was not, I mean, the analysis was not wrong, it was going good, but because of this unexpected happened, it went. So I mean, in this case, we can just move the stop loss or monitor more and just
because if this head and right shoulder is broken, then you should get out.
You get out. And for dollar also, like dollar, I had a buy trade, but for non-farm payrolls, when it announced the news, it went down. Though the stop loss not hit yet, but still AUD USD hit the stop loss.
Yeah.
But dollar
very good, excellent. So we should love the stop loss, we should love the profit, we should love both. We should love both loss and profit. And if you see the last 10 years data on the I don't know how many years you have studied, but we have kept last 10 years of data of head and shoulder, double bottom, double top, everything last 10 years. If you go and revisit this last 10 years, you will see yourself. I don't have to say because the record is there in front of you. 80% of the time we got success.
Got it. Okay.
So that is a very high percentage, isn't it?
So this was, you mean it was unexpected? It was
no,
like
it is
20%.
not. I would not use that word. I would say it is a cost of business. That's it.
You mean it is from that 20%?
Yeah, it is that from the 20%.
That makes sense. Yeah. No.
If you
no.
otherwise see, it will always nothing is 100%. Nothing is 100%.
Oh, that's okay.
Yeah. So
Okay.
our this thing would be 80% also. Okay.
No, just trying to understand that I did not did some,
No, you didn't. No, you
wrong
did not.
analysis.
No,
Yeah.
you did nothing wrong.
And that's fine, no problem.
Only wrong thing you did forgot is to close the trade when this line is broken.
Yeah, got it. Yeah.
That is the mistake. This is the learning from this.
Okay. Yeah. Thanks.
Okay, thank you. Now coming back to dollar index to go to the Fibonacci question which Barney has posted. So now we are seeing higher swing low. Even this fellow is higher than this. That's fine, and higher swing high, and then this fellow is coming down. So we have to do two things. We have to take advantage of Fibonacci confluence. First thing first, we'll draw the Fibonacci from the immediate one. From the immediate one, let me draw a little bit of. Let me clear this line so that it is a little bit better. All right, here. Okay, so I clear many lines. Okay. Now that we are having this line, and this line is probably coming from yearly. Yeah, this line is coming from yearly, and this line is also coming from yearly, and this line is also coming from. So it is below 3 yearly lines. Not bad. For down, for possibly going down. Anyway, so this is the last bar. So what our NP Financials strategy says, or modules and units on the instruction-based material says, we need to go to the previous swing low like this one and draw the Fibonacci. So first we'll draw from here to there, and we'll take everything out, including 0, 100. We'll take this one, which is price is not respecting. Ding ding, ding ding, ding ding, ding ding, ding ding. We'll only keep the oblique line and the last resort 88.6. Look at this fellow. Exactly stopped at 88.6. So there are three kinds of traders. Nothing to do with skill set, but to do with risk appetite. There are three types of traders. One is a risk taker or aggressive. I would say aggressive trader. One is a balanced risk trader, and the other one is risk aversive trader. So a person who is a little bit of aggressive trader, then he can, although he can get in here at the 88.6 and 9704, he can get in here. If he or she believes that this is still going to go up because the last 88.6 is not broken and this is not broken, so he can go in here. Why? Because his stop loss is, if he's taking the trade here is fine, but even if he's taking the trade here, your stop loss would be something like 64. Even if it goes here 88, he will get 1%. He will get more than 1%, 1.2%, 1.4%, and 2.57%. So I'm not telling you this, but a risk aggressive person would do that. Now let me do the second Fibonacci confluence. Fibonacci confluence is very important. So we'll go to the next one, which is this one, and go to the same point here, and take the other Fibonacci's level. So ding. No, I'll keep this one. Take this one out. Take this one out. Take this one out. Take this one out. Take this one out, because they are not relevant. So now we have a zone of support. Where is my zone gone? Yeah, this fellow. Now we have a zone of support between these two Fibonacci, and a zone of support is can be stronger than a point of support. So initially we had a point of support at 88.6. Now we have a zone of support of 88.6 from this Fibonacci, black Fibonacci, and 78.6 from this blue Fibonacci. So this is a Fibonacci confluence, and we got a zone of support. I'll not be surprised if price goes up. I'll be surprised if price goes down. But anyway, price can do and will do whatever it does. So this way you can take advantage of Fibonacci and enter here and put the stop loss here. and so on and so forth. So did I answer your question, first question, Bonnie?
Yeah, that's great, Parth. Thank you.
But Partha, you're not using plus 30 here in when you are entering rule of 4.
When we are entering on a close, we don't wait. That plus 30, that is a good question. Plus 30 or minus 30 is for a balanced trader, is about a balanced risk taker.
Okay.
Balanced. Any other question on this one while we are here on the Fibonacci? Else we'll go to the Barney's second question. Please ask question. This is your time. Could you show how pivot points can be used in trade-offs? Yes, of course I can show you. But before this one, I'll take Girija's question because I have answered EuroCAD. Girija, did you reach?
Sir, yes.
You're not driving now, right?
No, not at all.
Fantastic. So we have actually aligned with your driving time. Now that you are not driving, we'll take your question. Okay.
Thank you so much, sir.
All right. So C has asked what will happen to the this fellow gold. Very interesting question. Very good question. Excellent question. Because FOMC chairman, Fed chairman Powell is shifting the focus. Then the entire world will also reevaluate two things. One is dollar index and the other thing is gold. All right. So for the time being, we can draw some lines probably. Yeah. So this line is still there or not? I don't know. Okay, forget about it. I was thinking of drawing this line to this line. Yeah, still there. So if I do this fellow little bit thicker, yeah, and change this color. Yeah, this line is an interesting line, very interesting line. Because this is the last low in July. This was the last but one. This is last but one low on April. So April, and then this is a crack and snapback. Those of you who have studied the crack and snapback must have noticed this is crack and snapback. Everyone believes that that's a crack and snapback, yes or no? Who does not believe that that's a crack and snapback? This fellow. This fellow is a crack and snapback. Last two candles, yes or no?
Arthur, can you explain why that's a crack and snapback? Because I'm new to that concept.
Okay, that's okay. So crack and snapback is there in our book, if I'm not wrong. Instruction based discussion, Traders Foundation. Yeah, anyone? Who was that? Interesting.
Not me.
Not you. All right. So Pooja is here. Hi Pooja, how are you? So let's see any other question. I have answered this question. Okay.
Hi, Parth. I'm good.
Good. All right. So now we are discussing a point on crack and snapback. So we'll go to instruction-based discussion, Traders Foundation, and go to most probably module 2 and unit 1, if I'm not wrong, unit 2, I believe. Two places we have discussed crack and snapback. One is module 2, unit 2, page number 1 of Traders Foundation, and another one was the double bottom. We said 5 things should happen. Write it down if you have already forgotten. Module 2, unit 2, page number 1. Human. We are human. There was a saying probably in Kim can correct me. They say, to err is human, forgive is divine. Right, Kim?
Of course, Partha.
Huh?
Of course.
Of course. Now I'm changing a little bit, taking source to source from that. Now I'm modifying, with all your permission, to forget is human, forgive is divine. You like it? So we all forget, right? My goodness.
Arthur,
Go.
we should also make it to forgive is human.
Forgive is human. Yeah, that's correct. To forgive. Then what should be divine?
Forget divine. Forgive is human, divine to forget.
So as human being, the more and more I'm seeing, specifically traders and everyone else, more and more I am believing that we are going to a goldfish memory. And what is the goldfish memory retention time? Anyone can tell me? Anyone?
It's one circumference around the fishbowl.
Yeah. 3 seconds. Oh my God! No, this is wrong. This I don't believe. This if the latest 5 to 6 months. No. This is wrong. I was told this Google is horrible. Let me go to ChatGPT. Let's do some fun. Goldfish memory retention time is how much? Anyone know? I knew that it was 3 seconds. Yeah. I love ChatGPT. See? I love it because 3 seconds.
Read ahead, but that's not true at all.
Girija read this one. But anyway, I'll believe this one. 3 second memory. So what I'm trying to say is we are like going to goldfish. So we are becoming goldfish and goldfish is like human. The old myth says goldfish is 3 seconds, but now they get science says that they can remember. I don't believe. I think elephant can remember for life. Isn't it? All right.
Yes, you're absolutely right about the elephants.
Yeah.
Goldfish can only remember until it sees another goldfish.
Repeat, Tyrone.
Goldfish can only remember until it sees another goldfish.
Okay. This is a new definition of Tyrone. Goldfish can only remember till another time it sees another goldfish. All right. So that is what I'm saying. Why I'm coming to goldfish, because we as human being, our retention is only 3 seconds. After that we forget. Anyway, those of us who are human, forgetfulness is human, forgive is divine, and now Kim is saying forgive is human. Anyway, all right. So crack and snapback. Module 2, unit 2, page number 1 of Traders Foundation. We said 4 or 5 things should happen. First thing first, we should draw a line when we see a yearly swing low, swing high, quarterly swing low, swing high, monthly swing high, swing low. Yes or no? Everyone know that? Correct? That is why these lines are there. This is coming from yearly. Yeah.
Yes.
So everyone knows that. All right. Now I'll go to ask this one. What is the name of this bar? What is the name of this bar when it is close is near to the low at a support? What is the name we have given?
Oh, so was that? Yes,
Hey, who's that?
Paul has out.
Who said that?
Sumit.
Sumit, and previously who said that?
Jack.
So Jack and Sumit only having more than 3 seconds memory. All right. And after that, what will happen? So the aggressive professional traders will buy, because forget about the right hand side. Aggressive professional traders will buy because he saw there is a support and all sellers out, so he will buy. And the amateurs know nothing. Amateurs having 0 second memory, also 0 level of knowledge, because they are amateurs. They are not trained. So amateurs will know nothing. They will continue to sell. So with the pressure of the amateur selling orders, this fellow will crack. So this next bar, forget about right hand side, only concentrate on my arrow. So first thing first, we saw all sellers out. Second thing, we saw a crack. This fellow cracking the previous line. Do you believe, Bernie?
Yeah.
So this is crack. So this is second. First is also drawing this line. People are so, what should I say? Procrastinate. Yeah. They will think that, oh, I'll do the whole task, I'll do the practice task later on, and then later on will never come, and they will forget to draw these lines. That is why these lines are hidden lines, because it is not drawn. If it is not drawn, it is hidden. Otherwise, first thing, a line should come here, like this fellow, like this fellow, like this fellow. The line should be there. Number one. Number two, all sellers out should happen. Number three, cracks should happen, and the more professionals will be excited to buy. So they buy here, because they are expecting a zone of support, and then boom, and then why boom? Because people, everyone will say, oh my God, I'm selling, but the price is not going down. Then what should I do? Then professionals buy more here, more professional buy here, and then price will go up because more buy order is there. So and this will happen. And then this is a snapback, because this fellow closed above this line, and this is crack and snapback. Do you believe now, Bernie?
Yeah, I guess for me, I'm always concerned that how do we know the price isn't going to, so if you wanted to place the aggressive trade at the all sellers out, I mean, I guess it comes with obviously practice, but
yeah.
it won't just keep going down.
Obviously it can go down. Then they will close the trade with a loss. They'll close the trade. But if you do the crack and snapback study, I can, there is no guarantee in trading, but at NP Financials, we give many guarantee, and one such guarantee is, once you are trained by us, you don't have to go to anywhere else to know anything more than what we said. That is our guarantee. On that guarantee, I'm telling you, if you do crack and snapback study, you will see it is very high successful. It is extremely very high successful. 80% you will get success. That is why the famous Josh Soros said, the best trading strategy is not just algorithm, that is a AI, robot, bot, whatever you name it, but a blend of art and science. That is what I'm trying to show you in this masterclass. Shaped by experience and insight. That is what you said, that will come with time. Okay. Now you know what is crack and snapback, Bernie?
Yeah. So I guess in terms of placing the trade, would you wait for that next candle that closes above the?
Okay, very good. Fantastic. So the first thing is the line. Second thing is the all sellers out. Third thing is the crack. Fourth thing is the snapback. And the fifth thing is this bar, which is closed near to the high at a support. What is the name we have given at NP Financials?
All buyers in.
Very good. All buyers in. So that is the fifth thing. So the balanced people will buy here. The risk averse people will buy when this is taken by 30 pips. So these 6 things should happen. If these 6 things happening, then possibly it is a very high probability trade and price will go up. Now coming back to our dollar. So this is a crack and snapback, yes or no?
Yes.
Now how many things has happened here? Out of 6, I told you just now.
It looks like 6 has happened.
No, the last thing has not happened. High taken out.
Because that's an all buyers. All
buyers in. This is all sellers out. This is all buyers in. The last thing is the high not taken out. High not taken out. Can you see that?
Which high part?
This all buyers in high. All buyers in.
Okay. Yeah. When you say taken out, I mean, don't you need to wait for the next candle to close above it?
Sorry, what was that?
Don't you need a new candle to close above that high? The high.
No, not at all. Only this enough. This all buyers in is enough. All buyers in is enough. Make sense?
When you're saying the high is not taken out, isn't the high taken out because
this bar high. What is the high of this bar?
9.956, I think.
9966, correct?
9.966. Yeah.
Now add 30 to it. So what is the number?
9996.
So 9996 would be our entry point here. We should enter at 9996. Okay.
Yeah.
Now, any question on Crack and Snapback, or did I clear your doubt?
No, that helps. Thank you.
Okay, let's see. 9996. Let's see. So what is the high of this one?
9983.
So we are not yet there.
I see there's a new candle there. Not yet. No.
Not yet. So we are not in the trade, right?
No.
Okay. Now, so this fellow has before that we are drawing this line. We are drawing this line because that was a swing low. This is a swing low. So this is the bottom line of the maybe a big flag. Okay. Big falling wedge or flag, whatever you call it. Yeah. So now this fellow, this line which you have drawn in brown, this fellow cracked with all sellers out. This fellow snap back with all buyers in, but we are not yet there because 9996 is not yet. And then next bar, this did not break the brown line. This did not break the brown line. And this did not break the brown line. For a moment, if I delete these two lines for a moment, can you see that this brown line is effective?
Yeah.
Still effective, still holding on.
Yeah.
So we can say this is all sellers out. We can say this all sellers out, correct?
You're saying it's another all sellers out?
Yeah, this one. Because close is near to the low at a support.
Yeah.
So it will be very interesting to see in the month of September. September is generally is a bad month for equity, but we are not in equity. We are in Forex. But if this September is holding on to this, then probably we will use that Fibonacci which I have drawn before to go up 88.6 or 78.6. Now we'll take your second question. Any question on Fibonacci?
No, that helps a lot. Thank you.
Very good. Now we'll go to pivot point. Ding, 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 ding. Pivot point yearly, come on. Yes. So it came a pivot point quarterly, come in. Yes. Pivot point monthly, come in. Yes. Don't do this extend alter, do a display on all, display name, and same thing, name and display on all history, and name and display on all history. What does it mean? Display on all history is if you take this out, most of the lines will be gone. See, only the last month will come. Okay. So you should have resistance 4, resistance 3, resistance 2, resistance 1. Jack is doing the study on the pivot point, right, Jack?
Yes, that is correct.
Yeah. Jack, before I comment, Jack, would you like to take this question on pivot point, because you are very fresh on the pivot point, and throw some light to all of us? What are your observations here? This is monthly pivot. This is quarterly pivot. Go, Jack.
My observations so far are that if price opens up below the pivot point and below the monthly pivot point, which then would also mean it would go most likely down, is what I have been experiencing.
Yeah.
And the opposite for if it opens up above the pivot line.
Like this?
Yes.
Yeah. Go, continue. It will go up.
What else would you like to know? Sorry.
And what are your observation on pivot point clubbing or pivot monthly and weekly?
Well, I can see on what Jack said, Partha, on that logic, you can see around May 8th, where there's that head, the price comes below the monthly pivot, and that's when it starts to come down.
Yeah. So this fellow, thank you, Jack. Jack, would you like to add anything?
No, that's all I have to add.
So Jack said if it is coming from above to below monthly pivot, then there is a tendency to price to go down. And if it is staying below the pivot, tendency to go down. If it is coming from above to below pivot monthly, tendency to go down. If it is coming staying below pivot, tendency to go down. If it is coming from below to above on monthly pivot, tendency to go up. And there is a crack and snap back here, as you can see. So that's normal. We use this pivot point in our beginners course, and we'll cover that pivot points in a big way, which is there in our
This is module 3. Module 3.
What is
Unit
that?
1.
Huh?
Module 3, Unit 1. Beginners.
Module 3, Unit 1. Thanks, Sumit.
But one question I have here: how can we see from swing high to swing low in pivot?
That's an advanced question, isn't it? All right, let it come. So module 3 Unit 1. Okay. So all right, did I answer your question, Bernie, on pivot point?
Yeah, I mean, I'm pretty new to it, Partha. I'm just trying to, I guess, see how it can be used. And I think I'm understanding it's not really around setting price targets as much as seeing the trend of the price, maybe.
Yeah, exactly. Yeah, that on that trend, I will add on something a little bit. Thanks to Sumit, he said module 3, Unit 1. Come on. Still thinking, maybe. Oh, it is showing other units. This takes some time. Sometimes it takes some time. When it comes to module 3. In the meantime, any question from anyone on the subjects which we have covered? We have covered a lot today. We have covered correlation. We have covered how to know dollar index. We covered if you know dollar index, how you know 6 of them, and then we covered the shift in the global economic situation. The shift is now more to non-farm payroll than to inflation, because I don't know, they have somehow managed to control the inflation, but they are failing in the non-farm payroll. But anyway, if this is not coming this time, module 3 Unit 1, then probably I'll go on.
Partha, are you going to cover the exact point of trend reversal on your agenda?
Yeah, exactly. Yeah, that's what I told. I think I tried to cover, if you remember, the first swing low, first higher swing low, low.
Okay.
Yeah.
I saw that. That's okay.
Yeah.
I thought you were going to do a separate section for that. That's all.
No. So I can answer any specific question. So what you will learn, Bonnie, in due course. In due course, what you will learn, I'll take this one, I'll take this one out, I'll keep this one, I'll take this one out, all these ones out, just to answer a little bit more on Bernie and a little bit more on Tyron and Sumit. So I have kept only monthly pivot, which is in blue. Whatever color you can use red. if you like, and then go to pivot weekly. Pivot weekly, take everything out. Take everything out. Only keep pivot. Only keep pivot in black or whatever. You can keep it in purple also. So and then do this price as this fellow. Okay, let's study this pivot magic now. The magic says, Sumit asked, and also Tyron asked, the magic says that you can start from anywhere to anywhere. Okay. The magic says, it is written in our modules and in it is not magic, it's just an observation. It's just an observation of last 16 years. Is if you see the weekly pivot, which is purple, is below the monthly pivot, then the price is having a tendency to go down. Entire month ding, entire month ding, entire month ding. And then a little bit up, it tried to go up but fell. Again, pivot, weekly pivot is below monthly pivot ding. So this way, if you see, if the weekly pivot is above the monthly pivot, then there is a tendency of price to go up as it did here. If the weekly pivot is below the monthly pivot, there is a tendency of price to go down as it did. This much is clear? Any question on this much?
What time frame should we use here?
You can use daily or you can use 4 hourly.
Okay.
Yeah. Any other question?
Yeah, well, one question I have.
Yeah.
When Partha, you are saying that it is the purple is below the red one, that it tendencies to go down. But which, I mean, the next pivot, if you compare, it is above. So how you observe that? For example, if you see here, yeah, here it is ready to go down, but it is above the next pivot.
No. We are seeing the first pivot here. We are seeing the pivot. I don't know whether you can see it or not. If you see this purple, let me go one.
For example, if we go live market like this one, right side, we don't know what's happening.
Yeah. So can you see this weekly pivot is below the monthly pivot?
Yeah, here this much we can see. So we have a observation. It will go down. Okay. Next, now we can go right side. Yeah. So it is going down. Now here we are here. Now we are here. So this pivot is still the below red one, the monthly. So we think it should go down, right?
Yeah.
Okay, we can go right. Yeah, it's going down. Now we are here, and here we don't know now because there is monthly pivot, but it's quite above now. Can we consider that one?
Yeah, as long as this fellow, that's a very good question. As long as this pivot is staying, I can take this one out for a moment. I can take this one out. As long as this weekly pivot is staying below this monthly pivot, then there is a tendency to price to go down.
Okay.
For that month. But this is not 100%. But generally, yes.
Yeah, generally. Yeah. If we go right now, more right.
So Tyron, you can see the starting point of this when the first weekly pivot on this one, week number 5, when the week number 5 weekly pivot for this year, for the first time, this is January, this is February, for the first time in week number 5, if you see the weekly pivot is below the monthly pivot, then there is a possible change in the uptrend which is happening for so long. Tyron.
Yeah.
Tyron, yeah.
Okay, yeah. So if we go right from here. Yeah, so here still we have, because the pivot is below the monthly pivot, still we have a tendency of going down.
Correct.
So in this way, and more we can go more, because I just want to see when it go crossing the pivot, because it is right now it is showing that we don't have any monthly pivot above.
Yeah, no, this is the pivot.
Yeah, I mean all the weeklies below.
Yeah, obviously, because price is going down. Yeah,
going down. But where we can see that it is going up, so how it appears on the live chart, that only I just want to see.
So when it will come up,
that's
what the question is.
Yeah.
So that will be very interesting. As I told you on the start of the trade, is if you see 13% fall on this instrument, then there is a possible reversal, isn't it?
Yeah. Okay. Yeah, that is another study. Okay.
Yeah. So you can do that, or you can see a swing high, swing low on the pivot after the 13%. So let's see 13% happened here, yes or no, from here to there. So almost 10%, not yet 13%. Okay.
Yeah. Yeah.
We'll continue to go down. We'll continue to go down.
Yeah. So here. Sorry. This is interesting. If now here we see we have a monthly pivot here, and price went up to the monthly pivot. It crossed the monthly pivot, and now if we can't see the right chart, and we'll assume that it should go up because the weekly pivot is also above the next one. Yeah. Yeah, here if we are here, we'll see that okay, it should go up now. Or
no, I would say no. Who can say why I'm saying no? Sumit is saying pivot is higher than this, price should go up, but I'm saying no. At this point I'm saying no. Why?
Because the price is closed below the monthly.
Exactly correct. You got 100 out of 100. Who's that? Genius.
Barney.
Hey Barney, good on, mate, good on. Yeah, price cannot go up unless and until price is above both of them. Like this price cannot go down unless and until both of them, price is below both of them.
You mean the next pivot price close below the weekly?
No. If this fellow has to go up, that's what you are saying, because the pivot is above. I am saying not yet. Price has to go up first.
Okay, you mean the price should close above that pivot weekly.
Yeah.
Okay, if you go more right. Okay, still same. Okay.
See, price is going up now.
Yeah. So
now
here,
if the pivot goes up, if the pivot goes up and price goes both up, then possibly it will go up. Let's see.
Okay.
Now pivot goes up, price is down. Not yet. Not yet.
But pivot goes up, so that means
price is down.
Price is going down.
But price has to go above this pivot, then only price will go up. No, I don't know your understanding.
No. Yeah. So now, but one more question. The rule that that monthly pivot is below and weekly is above, we'll assume that the price should will be above it will rise. I mean the bullish sentiment is there, right?
Repeat your question.
The rule we assume that if the weekly pivot is above the monthly pivot here now, the price will remain up.
If price goes above both. The price goes above both, which has not happened yet.
Okay.
Let's see. Now it will happen. Because the weekly pivot is above the monthly pivot, price is above both. Do you understand?
Weekly above and price is above both. Okay.
Make sense?
Into this, we need three things. First thing first, as we can see the price monthly pivot. And then we have to check it where the weekly pivot is gone. Is it gone up? And after that, we need to wait for the price to go up. When price is going up, then we can say that yes, it is the reversal of a trend.
Correct.
And one more thing. Partha, you are using.
Did you understand, Sumit, what Girija said?
Yeah. I got this point. Thanks, Girija.
You should thank her.
Yeah. Thanks, Girija. But I'm saying, Partha, you are using in a daily, weekly, and monthly. But you told me that we should use in daily, weekly, and monthly and quarterly.
You can do that. You can do that. But that will take more time. For masterclass, I'm taking a smaller approach here.
Okay.
Yeah. Any other question, Barney or anyone on pivot?
No, that's really helpful.
Yeah, fantastic. So now I'll go to Girija's question. I think this is the last possible question I'll take if you do not have any other question on gold. So I believe I have answered all the questions. Let's see, anyone have posted any other question? Someone has come up and I need to leave. Okay, that's fine. So yeah, Shreya said so that was correct. All right. So I have answered all the questions. So I'll go to still Kim, you are contradicting yourself and confusing the class. Did you see yesterday's match, Kim? Between the cats and the lions? Who are the lions here and who are the cats? Most of them are outside Melbourne. They do not follow footy. They follow rugby, isn't it?
We
Tyrone?
don't live in Sydney. Yeah.
Barney, you follow rugby, yeah?
We follow rugby up here, I think.
Yeah, rugby league, rugby union. Yeah. Alpana Gallery, Geelong,
Union.
oh, second qualifying final, NCG. This is what Kim. This is
Union
King's.
is better than anything.
Who's that? Union. Hey, Geelong versus Brisbane, second qualifying final. Which photograph? Which one you took, Kim? Kim is a photographer and he loves photography. Which one he? These are all
They're
your
all mine.
photos?
All
They're
mine.
all yours. Oh my
Yep.
God! Look at this! Look at this photography of Kim Densham. And he gets the ticket free. I don't know free or not, but to the grand final. My goodness. These are all Kim's photography. You can see this photo. This is beautiful. Excellent. Thank you, Kim. Excellent.
But slow on the loading.
Yeah, it's that's my internet is down. Yeah, this is fantastic. Ball in dispute. It's so nice photography. Unbelievable. Oh, look at this. Unbelievable. Very nice photography, Kim. Excellent.
If you click on it, it enlarges.
Yeah. First, probably to fill in everything and then cats, lions. You took so many photographs. Patrick. Ooh. Oh, look at this fellow. Oh, God. Oh, look at this. Love footy. Oh, look at this. Spanky. Very nice. Very nice. Excellent photography, Kim. Brilliant. Everyone liked Kim's photography?
You don't have to.
That's pretty good.
Pretty good, isn't it? All right. My last question would be Girija's gold.
Because it was just gave like another so my concern is like I'm thinking like it might go a bit more up.
Well, up.
So what do you think? What is like everyone's thinking about that?
First, you tell why you think that it is going to go up.
As my trend line was saying me.
Okay.
And then this
Absolutely.
is daily. If we can go to the daily.
Yeah. We'll start with this as
Okay.
Girija question on gold. Because of inflation, because of tariff, because of shift from inflation to non-farm payroll, the whole world is confused now. The whole world is confused. If you see the previous high of gold, which was at 1921.2, and it fell from 1921.2 in 2011, it failed from here to this fellow 45%. 45%. And those of you lucky who bought gold here at 1010, and as trader, what we do, we take this as a scale or a rectangle, whatever you do, as a measurement, and you copy this and paste it here to get your second target at 222790. You copy this and paste it here to get the third target. The third target for gold for us is probably 3650. 3650. So 3650, Girija, to answer your question, you are also saying the same. 3650 is possible gold third target because that's what this fellow is telling us. This fellow, the rectangle is telling us.
Yes.
Now let's go to, we have drawn the, we can draw from this Fibonacci to this, we can draw that. This is very interesting Fibonacci on a yearly chart from here to there. If we, what does it mean? So, okay, sorry. I click text. So Fibonacci from here to here, and then go to expansion. Let's see the magic. Fibonacci expansion. It just crossed 423. It has just crossed 423, And the next target from the Fibonacci perspective is 4769, which is a far off, I will stick with this fellow. I love this fellow. There is no so price here. There is no so price target. So price, there is no nothing like that. So I cannot show you the price, but I can show you this is 3650. So 3650 is our target from the gold. And now let's go to quarterly.
Arthur, how did you get that rectangle? Is that because of it's going to the previous swing high?
Yeah. Because we got from this to this.
Yeah.
You can draw the scale also. You can take the scale from here to here, which is 874 points, and go from here to here another 874 here, and go from here to there another 874. There, that also you can do. The scale is saying it should go. Ruler is saying it should go. Price, where is price? Highlight. Yeah, it should go 3670. Rectangle is showing. I think the rectangle is a little bit off here and there. 3650. So my bet would be My bet would be anything between 3650 and 3670. Giriza, to start with, yeah.
Yes.
Okay, give me just 30 seconds. I'll just put up that alarm and come back. So I'm back between 3560 and 70. So that is the target. Now we'll go to quarterly. It has just crossed the 423.6. So two things can happen. Remember, this is quarterly. So July, August, September. So at the end of the September, it may go to 3670 and do a crack and snapback. This is how the professionals will see this market and analyze. Oh my God, what did I do? I hide. Okay, the professionals will do this way. To me, this looks like becoming all buyers out, all buyers out at a resistance. So two things can happen because we have the 70 and 60 from this. Let me draw this 70 and let me where am I? 70 and this one is 660. So we have two lines from yearly, and then we'll go to quarterly. So we can expect price to go up to this and do all buyers out, as we discussed in last 2 hours. We are almost discussing this. So it can do, because this will July, August, September. So this bar will end on 30th of September. We are now today on 6th of September. 30th of September, and then it can go there and close on all buyers out. Then possibly we'll sell here, taking the risk, and then we can see crack and snapback. So 5 things should happen. First thing, all buyers out, not yet. Second thing, crack, it is already done. Third thing, snapback, which will happen in the next quarter probably, and then all sellers in, and then low taken out. So this is futuristic. Let's go to monthly. Same thing, all buyers out, crack and snapback expectation, but it is having room to go now. That's what Girija said. If you are not understanding, let me know. This is interesting. This is a what is this? Standard deviation channel. Standard deviation channel, which is also approaching that red line, which is also approaching on the red line. This is weekly. Now we'll go to, and this, when this cross the standard deviation channel, it's a tendency to go down. Let's go to weekly, monthly, daily. Same thing. Daily, same thing.
Because into the daily, beautifully it gave us the hook entry.
Yeah. So our strategy on gold. So let's go to commodity trading. So I'll go to here, file, load, commodity trading. Oh, look at this. Oh my God.
Wow.
Every muscle, everything. You are a genius, Kim. Fantastic, right? So commodity trading on top of Geelong Cats. Go to gold.
Thanks, Partha.
Yeah, absolutely. And then this is the commodity trading. And then we are long from here on 1st of August. Our signal tells us to go long here 1st of August. And this fellow did not trigger. So there was no trade here because of the ESD. This fellow did not trigger. This fellow did not trigger. And then we go to another, we got another one, this one here, and then it is going up. I know Kim is a fantastic gold player. He has doubled his money in gold, and given this opportunity, Kim, what do you think? What do you think it will do? Gold, Kim?
See, Partha, what I think is irrelevant, but what the charts told me, and if you remember, we did that exercise on the Fibonacci confluence from various swing highs and swing lows.
Yeah.
So I've just put in chat. The target is around the Fib 161.8, starting from the June 16 swing high to the 30 June swing low.
So from June 16th swing high to 30 June swing low. So June 16th to 30th in the daily chart, is it?
Yeah. Oh no, that was a weekly. No, weekly. That's daily. Daily. Sorry.
Daily. So I'll go to 16th to 30th this year, correct?
Yeah, yeah. Last month, 2 months ago.
Let me delete this. I'll not save it, so that's fine. You can delete temporary lines and then you don't save it, that's fine. So I'll hide the Bollinger. So and hide the moving average. So from 16th to Fibonacci, 16th of June to
30th of June.
So from here to here, expansion. So I change this to expansion. We'll see some magic from Kim. Yeah, Kim, go.
So if you look where the 161 is, it's just broken that currently at 3576.
Yeah.
Which it's been an expansive market. So I've traded the expansions all the way up. And then if you look where the next target is, that'll be around the 37, I reckon.
3654, yeah.
Yeah,
with our rectangle matching, yeah.
Yeah, so you see the 200 target aligns with the 3650 roughly.
Yeah,
close enough.
Yeah. Yeah.
So that's where I'm trading, and this week's been very kind to me.
Ha ha ha. Because you are very kind to do all your practice tasks.
Martha, you know that's not true. I've only done some.
All right. Girija, did we answer your question or do you want to add something?
Absolutely. But I really want to thank Kim as well. Remember when I discussed so many times in my class as well, one-on-one session, that how Kim you explained about the gold market when you were doing it. It just helped me out to understand the chart better.
Yeah, absolutely. 100%.
So I'm just like, it was a kind of, like really, really good information for me into the monthly masterclass.
Yeah.
So, thanks, Girija.
Welcome.
Any question on gold or any question to Kim or Girija?
I'm just concerned because looking at the dollar index, there's the negative correlation with the dollar index, and it looks like the dollar index may go up.
Yeah.
So can we assume that gold actually may come down if that's the case?
Yeah, absolutely true.
We always see how many times correction, so it might be the correction coming into our chart. Take it like I always take it like that way.
Yeah.
Yeah, and also if you look at the outer Bollinger Band, it's tagged at 1, 2, 3, 4, 5, 6, 7, nearly 6 times.
And
So
this tagging,
looking for a pullback.
tagging is a famous thing for Shreya, I believe. Shreya, are you there? Any comment on tagging, Shreya?
Yes, sir. Yep. For me, I would kind of be very cautious around here if I were trading gold right now. I am trading it. It's on a intraday level, not on a daily level. But yeah, I'll be very cautious because it has tagged the Bollinger Band, the upper Bollinger Band 6 times. So it is getting ready for a possible correction.
Yep. Excellent. Fantastic. Thank you very much, Shreya. Any question to Shreya or Girija or Kim? So, Girija, did I answer your question?
Yes, sir, absolutely. Thank you so much for this.
So, did we answer all your questions? Everyone having any last minute question?
Yes.
If not, then I'll thank you so very much. Really appreciate your short notice and joining the class on Saturday. And happy Father's Day to all of you. Would-be fathers or already fathers, and enjoy your Father's Day tomorrow. And enjoy the trading for this September. And that definitely something is going to happen on the dollar index and gold, and obviously for the other currency pairs and other instruments. For the time being, the one which is skyrocketing is the share market. If you go to our last slide on share market, if you go to this one here, so you will see this fellow is skyrocketing. Google. GOOG. Yeah, this fellow is skyrocketing, and our signal is coming from here. Go long, go long, go long, 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 long. Yeah. So happy trading and bye for now.
Thanks,
you.
Martha.
Thank you.
everyone.
Thank you, sir. Thank you. Bye bye.
Thank you very much.
Thank you. Bye.
Thank you. Thank you.
Thanks, Pathos. See you.
Thank you, mate. Yeah. Thanks, Jack.